you were the last 2 months you've started to explore the world of foreign exchange a little bit, and curious. And we used to do segments called Where Do I Start? And we do that where we'd bring someone, and I did it with my son and other people at the Tasty Dream, and walk them through how do we adopt. At that time it was futures, but here we're talking about FX to extend a little bit of simpler adoption because we can make the products smaller, which is great. Futures are larger by nature. When you go through the idea of something new, and I think it was fun, and your story around how you were here the first day, you logged onto the demo environment, and tell us a little bit about this. And that speaks to what we want to do is start to think realistically around trading. A demo is a tool. It's not going to be your trading journey is up to you. It's very unique to you. Everyone's is different. And the best way to start with that journey is to kind of define what we're comfortable risking, what we want to put into this journey of product adoption. Now, kind of walk through your demo journey, because this is classic new person demo journey. And at the end of the day, what did you walk away learning?
Yeah, so you were right, it was, I think, my first day, set up the demo account. And I proceeded to lose probably $6,000 within 5 minutes because I was just clicking random buttons. I remember it was dollar yen. That was what I lost the money on. And I was like, well, this is not a good process, which obviously it's not. I don't know why I thought maybe I'll just click a bunch of buttons and I'll make money. But I think at that moment I realized I need to take a step back, and my goals should be focused on more than just a profit or making money, but about getting the background necessary to be able to make more educated decisions. So instead of just kind of placing trades, looking at trends and kind of saying, oh, okay, this is what everyone else is doing, I should go along on this, whatever. But reading the news every morning I come in, I take an hour or two, not that long actually, I don't know why I said 2 hours, but I go through Twitter, I go through a bunch of different news sites, and just kind of check out, economic data, and then I make my own decisions based on that. And I think it's important to get that economic and cultural background before you're making decisions, which is obvious, but I think as a newer trader, I think it's easy to feel like I should know this or I should just go in on this, but I don't think it's always that simple. So that's been the easiest for me, is to just pace myself, not take on any too big of risk, but just minimal ones, and kind of adapt from there.
And that's perfect, because when new traders come in and they trade stock, they trade things they're interested in. You know, I trade Apple. Well, because you have an iPhone, and because you have an iPhone and an iPad, that passion that I'm starting to understand a little bit of their product, it gives you passion to learn. It doesn't give you insight into where Apple's going to be trading in a day, an hour, or a minute. But the idea of starting to get context around what drives product is an important part of the process, because once you get that context, you can find what pairs might be interesting to you. And I think what you shared with me, what resonated was you thought the idea of currencies having a commodity component to them, whether that be Canada and crude or Aussie and its relationship to China, because so many commodities flow from Australia to China, and Australia is used kind of as a free market offshore place for Chinese businesses to kind of span the globe. That was a hook that made it interesting, and that's your hook, which is great. So you've identified products that are interesting, and that's part of the process. We want to find things we find interesting, we want to learn more about. And then it gets down to what we need to start thinking about. And I think your exercise around the demo it was a great explanation, because it speaks to, is a demo environment where I want to learn? Now, there are takeaways of understanding how to place an order and stuff like that. But the idea that you lost $6,000 and it was funny and it went quickly because dollar yen was moving, but the emotional scar from that was zero, because it didn't cost you anything. And what we need to do is, when we start to really think about how we're going to engage with product, we want to create ideas in areas that we find passion for or have an interest in learning more, size those ideas appropriately, and think about our risk tolerance. Because the one thing a new trader has to accept is, and it's so funny, everybody, when they start, is like, well, I'm going to buy this here because it's going to go here, and I'm going to make this. And traders need to start thinking about, nobody makes money 100% of the time. some of the most successful firms in the world live on the edge of 52-48. What I mean is they make money 52% of the time, they lose it 48% of the time. And you think, well, that's not a lot of difference. If you're trading millions of shares or thousands of contracts, it does make a difference. Now, we don't need to live in the world of 52-48, but we'd like to come up with some mechanics that let us all understand we're never going to have 100% or 90% 10. What we want is a realistic blend of wins and losses. And how we do that is we don't let losses overwhelm our gains. So we start with mechanics. In this product, it's a very simple product to trade. So if you buy it, it goes up, you make money. If it goes down, you lose money. Okay, it's as simple as that. So that tells me a couple of things. It's easy to adopt across these pairs. If there's good liquidity and an interesting opportunity that fits my trading style, I can adopt it. Can I scale it down? Absolutely. You can scale down to $1,000 of notional, which is a very tiny trade. It's in euro, it's less than probably $23 in margin. If I am maybe $30 in margin, and we can look at that. But I want to start thinking about, what do I want to risk each day? And that discussion is not what I'm going to make, but what am I willing to risk? And when we talk about risk, it means, what are we comfortable if we do have a bad day and we lose money? I've been doing this for 42 years. And when I walk in the door at home, my fantastic wife, who's put up with me for 31 years, knows the minute I walk in the door whether I made money or lost money that day. None of us like to lose money. And the thing is, can you come back the next day or that evening and trade with a clear head? Or is that loss so overwhelming that it clouds your judgment and skews which side of the market you want to be on? So we want to look at what's the right size that's a comfortable thing we can live with in terms of risk mitigation, that loss size. And then we look at, okay, I'm willing to risk this every day. What's interesting that gives me a tradable range where I'm not trying to take a little slice of it, but that will give me the ability to be in the market for a certain period of time. So how do we find that range? Well, we look at the pairs, and different pairs have different volatilities to them and different daily ranges. And then we look at sizing the product. So I've got the right size product in terms of notional exposure that will not make me have to perfectly pick the bottom or top, otherwise I'm going to get out, but gives you enough chance to be in the market to be right, and then manage when you're wrong. So that's part of the exercise we're going to go through a little bit. And as you said, there is no finish line in this process, which, if you like a challenge, is great. Traders are like sharks. If you're not moving forward and learning, you die. So part of the journey you and I are going to take a little bit, is that journey of discovery around product. And we're going to walk through a little bit some of the pairs and take a look at a little bit of what interests you. So let's run through, because we do have some interesting stuff today. Dollar yen.
Original source subject for me.
Original, and I've got to...
Man, look at that.
I've got to imagine, too, that probably we can go out to the daily here and take a look. And I'm sure you were, if I remember correctly, it was either right around here or right around there. And it was probably trading too big. And, when you trade, and throughout my career, I've mentored prop traders and stuff like that. The hardest time guys have is if they make money the first 5 days. Because then there's this proclivity to think I figured it out. And that becomes a dangerous concept. When you talk to experienced traders, I've been at, well, what was your biggest day ever, your winning day? And honestly, we all have big winning days, but what stands out in my mind are the losing days, because that was a breakdown of mechanics, breakdown of discipline, and not accepting the fact that what I thought was going to happen is not taking place. The tape is the perfect conduit. Where markets are pricing are exactly where they should be. When you start to say this shouldn't be here, that means your ideas are fundamentally disconnected from reality. So dollar yen, all the way, we got close to 150 yesterday on the CPI print. It's still held here. We've got PPI coming out today. Got Canadian unemployment. We'll talk a little bit about that too. So that should give us some movement around the Canadian dollar. Relatively quiet inside 9 as we see. Sterling down a little bit, a dollar yen up a little bit. Both of those indicating a little bit stronger dollar. Aussie off just a skosh. Kiwi recovering a little bit from the lows it had previously. Some of the safe haven currencies. Dollar Swiss,
Yeah.
we've seen a pretty strong run up there, a little bit of pullback. So we're seeing a little bit of, might be weekend, we've had a pretty big move in dollar Swiss. Swiss typically a flight to quality kind of trade where dollar Swiss will trade down. And remember, when we say dollar Swiss trades down, what is Swiss doing?
Going up.
Look at you. Now that's an
go.
answer 8 out of 10 traders would not know. So that's absolutely right. So when we look at the pair here, when the dollar is moving one way, it means the other side of the pair is moving the other. So if Swiss is a flight to quality trade and you want to use it that way, you're selling dollar Swiss because you're expecting the Swiss to appreciate relative to the dollar. Looking at the quote, it's that simple. It's that simple expression of just the relationship of these two pairs as a trade idea. So we're seeing a little bit of softness in dollar Swiss, which means Swiss is being bid, maybe a little bit of uptake into a weekend where we still have overhanging geopolitical risk. So, but let's go and take a look at dollar Canada, because when we go to the calendar, and let's run through that really quickly. Economic calendar, what do we have coming up this morning? We have...
Do we have unemployment for Canada too?
Here today. We do. Good for you. That's fantastic. So we have US PPI at 7:30. We had CPI yesterday. PPI, another measure of inflation. Less, for some reason, it's less looked at. Yeah. They're all irrelevant. CPI did exactly what we wanted to yesterday. It was a little bit hotter than expected, and we didn't guess whether it was hotter. What it did is it gave us a trade up to almost 150 in dollar yen. It gave us a pullback in things like Swiss and Aussie that if you wanted to play the contrarian play, you got a good elastic move in the market
For sure.
to put trades on or manage positions. That's all these are for. Don't guess what they are. Just see how the markets react. Think about where the ranges are that you might want to get in and do that. We also have today is, and let's find that, at 7:30 we have Canadian unemployment, and we should show that on the calendar here today. So, let's see if that's why we don't have it. So again, going into the calendar, this calendar is fantastic. It really is a clean, great calendar to look at. We can add the Canada there, and then all of a sudden there, they call it where we call it non-farm payrolls, it's called the participation rate. How many new jobs were added, and how many participation rate is kind of like the unemployment rate, and employment change is how many jobs added. So for dollar Canada, if we see more jobs added than this 27,000 forecast, chances are the Canadian dollar will rally relative to the US dollar. It means dollar Canada falls. If we see less, it will rally. So let's know that we've got binary event. I don't care what the number is. I just want it to be different so the market moves. Let's go back to the major pairs. Let's look at Canada and take a look. Canada's had a heck of a move to the upside.
Yeah,
now,
wow.
This is often, sometimes, and I don't want our Canadian viewers to think pejoratively, but again, the nickname for the Canada is, look at you. See, there's nothing Bridgette doesn't know. It's amazing. It took Glenn months to get through that part. So it's so fantastic. Heck of a move to the upside here. 134.5 on the lows. A lot of times the Canada will track the US dollar. So it becomes kind of like a very correlated part. When the US dollar is up, Canada's up. Dollar Canada's up. Now, what changes that? Days like today where we have specific Canadian binary event risk. Days when the oil moves. And what's interesting is I believe oil's a little bit lower today, and we're seeing dollar Canada rally. So again, higher crude prices tend to cause Canada rally relative to the dollar. This trade lower. Softer oil prices cause dollar Canada to rally. But we're looking at the top end of a pretty high extreme here. When we look at, and we can walk through a little bit, let's just get a little bit more granular. So we know there's been a big move here. Let's go down to 15 minutes here. And, we're seeing on a daily basis, I'm jumping around here a little bit. I gotta watch my time. We've seen pretty healthy moves there of about 50 basis points on this up move, 50 to 60 at a daily range. So if we just, and this is just ballparking it. So what's a normal day? That's what we want to start to think around.
Yeah.
50 points. Okay, so can I create a trade that gives me 50 points or $50 of risk during the day? And we can do that. You can do that by creating, again, a limit order.
Now that I've familiarized myself too with the mechanics, I do really feel like focusing on, as a newer trader, focusing on one pair really helps you understand that what is a normal day, you know?
Absolutely. And you know what? The goal is not to know what a normal pair is.
Right.
And we're going
and there
to
is there one. Even,
right. And
you
we're
know?
going to actually do a little bit of statistical math around 1 standard deviation, 2 standard deviations, moves, and get that out to everybody. But the platform gives you margin requirement. If I'm doing a micro lot, I'm getting about 1,000 Canadian dollars of exposure. It's requiring $20 of margin to do so. So it is a relatively small moving pair. It moves 10 cents per pip. So when we think about that, a 50 pip move would be about 50 Canadian dollars, which we know ballpark is about $45. So a normal day here is about a $50 US move. So this is something that if you're comfortable with that starting point, you can really start small and start to look at, okay, give it a normal day is we've ballparked 50 basis points just by looking at the chart. If the market goes 138 or 137, I might be interested in playing either side of it. If I'm a momentum trader, I'm looking for a little bit of pullback to buy. If I'm a contrarian, a 4.5 handle rally to the upside is interesting.
Yeah.
So both of these set up very easily to do. And really, and I wanted to highlight this again too. What is your cost of doing business here? We're looking at the spread right now, 73.8, 75.3. So that difference in spread of 1.5 pips, that's our friction. When we buy on the offer side. When we sell on the bid side. Now, there are no commissions. And when I say that, and I said this yesterday too, we again, tastyfx hedges all of our FX exposure with IG Markets. So we're compensated from IG Markets. So that's the way the tastyfx makes its money. But we're able to provide, because of that spread, we'll be able to provide the customer a commission-free experience. So it's very simple. So you're looking at this. When you look at the opportunity, what are you thinking? Are you a contrarian? When you look at a chart, it's funny because my old business partner was the best momentum trader I've ever seen. I've never been a momentum trader. I'm not a guy looking to buy a dip on something that's moved like this. Traditionally, I'm always looking to fade something. What are you?
I think I typically will go with the momentum, to be honest. I think especially since I'm newer, but as we've been talking about this and, you know, as I'm familiarizing myself a little bit more, I do think taking, even just on a demo, but just a contrarian position. But I do think that you bring up an interesting point of just kind of like once in a while, like that judgment of like, okay, wait, why do I think this way? Why do I think this will continue? Let's pause. Let's take a minute, you know, be a little more mindful. Maybe we can, you know, maybe we would take an opposite position on that. So,
okay, fantastic.